The market bounced just enough to make the crowd believe the bull is back. But do the candles whisper the same story? At Investing Angles, we don't follow moves, we forecast them. Welcome to Daily Market Waves, where every candle speaks and every Elliott Wave hints before the crowd even blinks. And today we start with Volatility Index, as usual. So this is the daily closure today, and what we are seeing that we didn't have an immediate follow-up after a very strong bullish candles yesterday. Instead, volatility took a pause. However, the candles are not bearish at this moment. Most likely it's consolidation candles. And if we look at the momentum, for example, so this is the 2-day frame which closed today with a inside up, with a strong inside up green candle, which most likely signals a continued move higher. However, it might take another 2 days to develop. And the same situation is happening with the futures, which are closing in 10 minutes. So far, it is on track for a bullish candle. Now, if we look at the weekly frame, so it remains bullish at this moment. If it closes like this tomorrow and something tells me that it's going to be a very quiet day, perhaps, well, then the candles will be bullish. Although they would require a confirmation. However, if we see a spike in volatility tomorrow and the candle, particularly for the index, if it closes above the high of the previous week, it would be definitely bullish. So, but we will discuss it in our weekly report as usual after the weekly closure. Now let's move on and talk about bonds and yields. So what we are seeing today, that in 30 minutes, the yield candle will be closing with a daily candle, will be closing with a dark cloud cover. So most likely it's going to be a neutral bearish stance, but we would need to see a confirmation for this candle. So far, none of the trends is broken, and we are looking for a continued move upward. And this particularly the weekly candle, so far it looks bullish. Let's see what it closes, how it closes tomorrow. And I'd like to say that we have a significant technical support by multiple indicators and trends for the weekly frame. So even if it takes a pause, it is likely going to be a temporary one, maybe for 1-2 weeks, and then after that we will see a higher price. So this is the final reminder for Canadians. Guys, this is going to be huge. If the 5-year yield closes with this formation, I would consider it as a rising 3 methods on the five candles in between, and the rates might continue to fly upward. And if you are not sure what will happen next, check our weekly report where we discuss the possible targets and how far the Canadian yield can go. So now let's quickly look at the 20-year yield. This is an Elliott Wave chart we've been tracking since the end of April. So far, the wave looks impulsive. Let's see how it develops. So at this point, I don't have any concerns about changing the strategy here. So now let's move on and talk about TLT. So TLT had an interesting closure today. So it formed a piercing line, which is typically considered a bullish reversal candle. However, it would need a very strong confirmation above the Wednesday high. So if the candle closes above the Wednesday high tomorrow, it will likely be at least a short-term reversal. And we will also monitor how it closes the weekly frame also tomorrow. On the 8-day frame, so far it looks very bearish, and even if we see some fluctuations up and down here, then nevertheless the trend remains bearish. The long, mid and long terms are bearish. And speaking about the Elliott waves, this is the chart that we finalized at the end of April. Since then, TLT lost quite a bit. You might have avoided it if you followed us on time. And right now it is falling down. It's bounced today, but let's see whether it would be able to develop a stronger move higher. Well, so far the chart remains unchanged. Now let's talk about the next instrument, and it's US dollar. So what we are seeing here is the green candle, potentially a piercing line, but I would say it requires a big and strong confirmation at this moment, because, for example, the weekly frame, which is closing tomorrow, and the 3-day frame, which just formed a strong bearish candle, they are quite bearish, and the dollar needs a lot of effort in order to avoid a bearish closure on the weekly frame. So far, I'm looking for bearish odds, maybe moderate one, not extremely strong, but the moderate bearish odds. Dollar will likely continue to go down next or maybe several weeks. And speaking about the chart, Elliott Wave, so we have an impulse down and potentially another impulse down. So this wave could be wave alternative wave 3. And we would be looking for another. So this is alternative 3. Obviously, this would be alternative 4. Depends on how it develops. So far, my targets remain unchanged. The same that we discussed yesterday. I slightly updated them, minor adjustments. But the trend remains the same. Well, that's for the dollar, and now let's start discussing commodities, and we will start with gold. By the way, if you are subscribed but not getting alerts, it's probably because you haven't hit the bell. YouTube won't remind you unless you ask. Click the bell so you never miss a critical market turn. Now let's talk about gold. So today we have a bearish candle. This is a dark cloud cover. However, considering some technical support, I would say that this candle is rather weak, and we would need to see a very strong confirmation in order to reverse the potential move higher. And the two-day frame, it's closed with a soft bearish candle, but it's almost 50-50 chance to go either high or low, so it's undefined here. And the weekly closure will be absolutely instrumental tomorrow, because depending on where it closes, it will be either bearish or bullish. Well, maybe neutral, but I would say this construction, this combo is quite defining, and in order to negate it, gold needs to form a specific candle. We'll talk about it tomorrow in our weekly digest for commodities. So speaking about Elliott waves and classical patterns, I still think that gold potentially formed this bullish flag here, and right now it is trying to break through the upper boundary. So if it is successful, then I would say that these would be the targets, with the most probable 3,662. That's the most typical for the flag. Let's see how it ends tomorrow and what kind of message we will get from candles. So far, this is a very valid scenario. And speaking about technical terms for gold, so it formed a 3-day MACD bearish cross, and it's still leaning towards forming the one on the weekly frame. However, it's not ready yet, so it might still pull back and continue slightly higher. However, this cross will be an absolute record, and it will be of a record magnitude for all time. And well, if it goes a little higher, it makes the things a little worse. So the gold would have a better position for a more serious decline. That's the technical perspective. And the final discussion on gold is the GLD Gold Trust. It formed today a bearish candle inside down, but it would require a confirmation. So far, this the formation is not well supported technically. And for the weekly frame, it remains unclear. So after technically breaking through this, so it's forming a bullish candle, potentially bullish kicking. Let's see how it closes tomorrow. So if a closure like this would mean that we are looking for higher prices for GLD for at least 1 week. Now let's move on and talk about silver. So silver is quite different from gold. If gold is not decided and has better chances to move upward, silver formed a strong bearish engulfing on the daily frame, and it at the same time it wasn't able to form a big candle on a larger frame like 2 days or 3 days. Today is most likely posing doji, and on the weekly frame this level would be an absolutely critical. So let me measure it. It's 33,532. 33,532. So if it closes above this level, then we would be looking for a continued move higher. However, if it fails, well, it will be bearish. Now let's quickly look at the Elliott Wave. So I cleaned it up a little bit, considering the new developments, and the wave still remains unclear. So all I can say at this moment that this wave upward that silver continued to form is not an impulse anymore because of the overlap. So this still might be an ending diagonal, which will push the price a little higher somewhere here, and only after we will see a decline. However, silver is not decided at all. So I would say that there are two most probable paths right now. It's a blue one or the purple one, where the purple one is the wave one. Oh, the purple path. The wave one is here as an impulse, and this is an extended wave 2, and we would be looking for a serious move down. And the final chart for silver is the Silver Trust, SLV. What we are seeing here, technically the candle, from the candle perspective, it's a bearish one. However, it requires a confirmation, and that on the 2-day frame, it will be closing tomorrow. We'll see what it makes. So far, it is on track for a strong bearish harami. And for the weekly frame, this is the level that I defined here. So in order to break bullish and make a strong breakout, the SLV needs to close above 31.02, which is quite a significant move, and over 3% SLV needs to make. So which is a tall order. Let's see the closure. Now let's move on and have a look at oil. So oil brings no surprises here. After a very strong hammer bearish engulfing, technically it pushed prices lower, and it made more damage on the larger frame. The 2-day frame closed with another bearish engulfing, and if nothing happens, no strong rally tomorrow, the bearish candle will be formed on the weekly frame. So far, no surprises. So this is the Elliott Wave short-term chart, something that we discussed yesterday. So far, I have some reasons to believe that this was the first wave down, and right now oil is forming either already started wave 3 down, which could be here alternative 2, or it will make another bounce overnight, for example, like an ABC, something like this. So far the wave upward has been corrective, and this is what I'm looking for. However, I'd like to say that there is also a possibility that this wave, the very first wave, is not complete yet. So this is wave 1, 2, then we would be looking for wave 3 somewhere here, then we would be looking for wave 4 and wave 5, something like this. So the wave is still developing, and I don't have enough technical support, technical indicators to define whether it's wave 3 or it's wave 5 of a smaller degree. So that's the perspective. But nevertheless, oil is bearish on multiple smaller frame, and we are expecting it to move lower. The targets we will discuss tomorrow in the weekly report. Now let's have a look at our oil trio: ExxonMobil, Chevron, and ConocoPhillips. So today, most likely they closed with bearish candle, bearish continuation candle. At dojis, if we look at the 2-day frame, principle the same, and if we look at the weekly looks kind of very bearish for all of them, and this is the weekly candles that are shaping up right now. A closure like this will likely continue the ride down. And speaking about Conoco, from time to time I'm sharing this chart. So this was our call in January, at the end of January, when Conoco was about 101. Right now it's sitting at 86, and it lost over 15%. So those who listened to our call in January would have avoided a significant loss of 15%. And the target remain the same. We are not changing it for now. Now let's move on to the next energy instrument, and this is natural gas. So far, natural gas is pulling down slightly, and what I'd like to say that we might see another move slightly down. So far, this green candle hasn't been negated, and we might see another red candle within the body of the green. So speaking about the 2-day frame, so it closed just a few basis points below the open of the previous candle, so it's considered an inside down candle. So I think that very high probability that natural gas will move down in the next day or two. On the weekly frame, this is a big question, and at this point this is a doji, but we need to wait for another 23 hours to see how it closes, because at this point it could be a really instrumental formation. Now if we speak about Elliott Wave, this is the chart that we've been tracking for almost a month. So after bouncing in the middle, from the middle of the target, there's potentially an impulse, and the wave down has been corrective. So I'm looking for it to continue slightly lower, and after it completes, wave 3 will likely start. Now let's talk about uranium. So uranium looks positive, and although I cannot say it's extremely bullish here, but it's more just moderately bullish on the daily and 2-day frames. The weekly looks for a very strong bullish closure. If bulls were able to hold at this level tomorrow, I would be looking for a continued move higher, and we will discuss it together with the targets in our weekly report. And speaking about the energy fuels, it's not as bullish as the previous chart, and the candles are somewhat moderate, mostly neutral, and it still needs to recover from this strong bearish blow on the weekly frame. So tomorrow closure will be very instrumental for the weekly perspective. And speaking about the Elliott frame, the Elliott waves, I think that energy fuels will have a chance to move slightly lower here. I would be talking about this perspective, and this wave, this target most likely will extend. So this is for now, and tomorrow I will like to receive the necessary signal to define this path. So that's the perspective for another wave. And in this case, I would be looking for most likely an ending diagonal for wave C. Well, the final discussion is Chemical Corporation. So CCJ is bullish on the daily frame and is likely going to be bullish on the 2-day frame. A closure like this on the weekly frame will continue a move higher. However, we might see some minor pullback. But tomorrow we will discuss both the targets and the daily and the weekly closure. So that's all about commodities, and now let's move on to the stock market, and let's start with the candles for the major indices. So what we are seeing today, the green candles, generally green candles, and only the one for Nasdaq is somewhat bullish. The other ones for S&P 500, for Dow Jones, and IWM or Russell, they are bearish. The in-neck candles, the one for Nasdaq is technically a bullish harami, which requires a confirmation. At this point, considering the other three, I think that the confirmation is not very probable. Let's see how it closes tomorrow. Speaking about the futures, pretty much the same picture, and I'd like to say that we have a freshly made 100 by 200 days moving average cross for S&P 500, and it also happened, I think, yes, it happened today on the trust chart, and in an interesting position here. So even though we had a rally at the beginning of the day, so this rally didn't even challenge the neckline for potential double top for Russell. So the bearish odds are quite strong. And for the weekly frame, if Dow Jones and Russell are closing with the candles like this is mostly a most probable reversal on the day, on the weekly. For S&P 500 and the Nasdaq, it's quite neutral at this moment, but if a closure like this will be clear bearish harami, and with a good chances to resume the ride down. Speaking about technicals, these MACD crosses remain the same, no changes here, and the closure on May 30th will be instrumental, absolutely instrumental. If bulls cannot reverse the crosses by the time, then we are going down in June, most likely. Now let's talk about the charts here. So this is the perspective that we've been discussing since April 22nd, and all counts remain on the table right now. So far, this move looks impulsive, but we will talk about it in just 1 minute. There is a possibility for a continued move higher with a green path, with a green count. However, it is looking less and less probable at the moment. And today is May 22nd. Now let's talk about the next. This is the small frame, 1 hour frame. How we discussed it yesterday and the day before. No changes here. So the wave that futures and the index formed today is most likely a bearish flag, and I would be looking for a continued move down maybe tomorrow, but the flag could continue higher. So at this point, after seeing the structure, I can see also an alternative structure for the blue count. For example, this could be wave 1, impulsive wave 1. Then we have wave 2, very sharp and short, and this wave 3, 4, and potentially wave 5. So the targets so far remain unchanged, and whether it happens tomorrow or the day after, that's still a big question. And the break below this 5805.75 would be a very strong topping signal. Now let's talk about sectors. So all sectors today closed with either bearish continuation candles or some neutral candles. So the only mutineer was the technology sector, which potentially formed a bullish harami. However, considering some technicals, I would say it has very little chance to continue down. Well, so financial, industrial, staples, utilities, energy, and consumer discretionary, yes, and healthcare all closed with either bearish or bearish neutral candles. The only one that is neutral, potentially bullish, is the technology. Let's see if technology is able to pull the entire market with it. And speaking about technology, there are quite a few interesting formations here. So for example, if we look at Amazon candle is kind of neutral, even bullish. But if we look at the weekly closure, so there is little chance for Amazon to form a bullish candle here. So in order to do this, it would need to rally about, I would say, about 4% tomorrow. It's possible for Amazon, but considering the technicals, it would be a challenging move. And speaking about the Apple candles on the weekly frame, so far it looks very bearish. And if bulls are not able to make a super rally tomorrow, most likely Apple will close with a bearish candle and will continue lower. An interesting candle formation for Microsoft. So we have 3 harami candles within the body of this green one, and so the chances of a reversal here are increasing. But if we look at the 2-day frame, it's even more compelling case. So we have 10 candles, 10 green candles in a row, and we have a strong harami, and we have an attempt to make a higher high, and it failed for now. Let's see if it closes like this or with a red candle tomorrow. If Microsoft closes tomorrow below, let me give you the level, 448.73, 448.73, this would be super bearish on the 2-day frame. So just keep this in mind, and let's hope for the best. So that's the perspective after a very strong stretch. Speaking about Meta, Nvidia, they have neutral candles and an interesting, very strong bearish hammer for Alphabet. Most likely we will see a continued move down. And for Tesla, Tesla tried to negate it, and if we look at the weekly frame, it could be a bearish harami, but we need to see a closing print. So far, it's unconfirmed in any direction. And for Berkshire Hathaway, we'll talk about it in just a few moments as our special feature of the day. Now let's have a look at Nasdaq and see whether Nasdaq is aligned with S&P 500. So this is the chart that I've been tracking for a while, and what I'm seeing is a big fractal here, very similar to what Nasdaq did in February. The only thing that it's on a bigger frame, and the degree of this wave is higher. So right now it looks like Nasdaq is stopping because there is no clear wave in either direction, neither bullish nor bearish. Both directions have mostly consolidating waves. I think it's a topping pattern, but we need to see a clear confirmation. If we see it, I'll start discussing Nasdaq on a short term, and we'll publish it as well. Now let's talk about two big caps, and we will start with Amazon. So Amazon candles, a very interesting closure that we are looking for. Once last time we discussed it at the beginning of May, we said that this is not a good this is not a good combo for the Amazon bulls, because it most likely it is a following three methods. However, it was not immediately confirmed, but instead Amazon pushed higher but closed again within the body of this red candle. Now the green candle, but it is likely a consolidation one. Let's see how it closes tomorrow. So that's the perspective. And oh, this is the 8-day frame, so we need to wait for another week. This is the weekly closure. If a closure like this would be an on neck pattern, and the chances for moving lower would be fairly significant. Now, if we look at the short-term frame, this is what we discussed last time. And Amazon formed an impulsive wave down, and now we are looking for potentially wave B or 2. And then the final one, we would be expecting wave C, or most likely C. I highly doubt it's going to be a much stronger wave for considering as wave 3. So just keeping it for the sake of consistency. Well, now an ABC potential formation. Now let's talk about this chart. This is the technical discussion, something that we talked to our subscribers way back in April. when Amazon was only developing this cross. So MACD, monthly bearish cross, it happened in April, and right now Amazon is expanding it. So this is a little expansion. So if it's not reversed by the end of this month, then we would be looking for some serious moves here. So based on our statistical analysis, an average decline after such crosses is 51%, which would drop Amazon's price towards 115. And the range is within 30 and 94. Quite a big one. I think that the 94 was in 2000. Yes, in the year 2000. Well, it could be an outlier, but nevertheless, it's a valid range. So that's how much Amazon declined after the year 2000. So we would be looking for 115 as an average move after this cross is confirmed in 8 days. Well, and this is the long-term chart that we discussed way back in February when we called the top at 242. It was an exact and super call. After that, Amazon lost how much? It dropped over 33%, and I just marked the 51% here. This is the one that we outlined in our statistical analysis. So most likely this wave was impulsive. Wave B is being developed, or it's close to being complete, and wave C might take it towards 51. But the targets that we outlined back in February, they remain on the table. So that's the perspective for Amazon. Once we see a strong confirmation of a topping of a top here, we would be looking for a significant wave downward. And the final discussion of today is the Buffett's company. So this is the candles that Berkshire develops right now. So the weekly candle looks bearish. If it pushes just a little lower, it will be strong bearish. And it is also on track to form an monthly MACD bearish cross. So this is a very significant one. And if we look at the bigger frame, let's say 10-day frame, the cross is almost here. And I would be looking for the monthly one to happen, and this would be an absolute record, the highest ever. And once we have this cross, I would be running some statistical analysis to see where we potentially can end for this one. However, just a ballpark estimate, I think that based on some candles, I think that we would be looking for 350, 400 price for Berkshire. And speaking about the long-term, let me pull the long-term chart. So this is Elliott Wave estimate that we made back in May, saying that Berkshire completed an ending diagonal, most likely a big ending diagonal here, and the most typical return to the origin, to the level of origin, would be a loss about 20% of its value, and 437.90 is an exact level of origin. So this is what we are looking for. And if we look at the short-term chart, this is the one that we discussed way back at the beginning of May, saying that this is the perspective. So impulsive wave down, wave 1, potentially wave 2. However, wave 2 might continue. The targets remain these the same aligned with the estimates on candles and with the estimates on the larger time frame. So that's the perspective. That's all for today, and I'd like to wrap it up. Just to summarize, so today's bounce sparked some hope, but as we've seen time and again, one green candle doesn't build a trend. Volatility is quietly building momentum under the surface. The bond market paused, but it's far from out. The weekly closure will define the next move. The dollar moved lower, aligning with our longer-term forecast, and we are expecting it to move further. Gold took a breather, but it might have more in the tank. Silver, however, signals the opposite, perhaps a coming divergence. Oil moving exactly as forecasted. The candles never lied. Natural gas is quietly coiling. Expect an action soon. S&P 500 bounced, but the setup still says caution. Nasdaq is in the same indecisive boat. Sector-wise, technology stood out while others lacked leadership. Among large caps, Amazon is heading toward a critical technical event in May, and Berkshire is losing altitude, support after support. If you are seeking clarity beyond the noise, join us at investingangles.com. Our weekly digest membership just launched, diving deeper into the big picture, macro odds, and commodities not covered in weekly updates, including coffee, wheat, and long-term index outlooks. New members can still catch out our limited offer. Now is the time. If you find value today, like the video, subscribe if you haven't, and hit the bell. YouTube won't notify you unless you ask. Share this on X, Reddit, Discord, Telegram, WhatsApp, wherever smart traders gather. And remember, at Investing Angles, we don't follow markets, we forecast them before the crowd even blinks.